So a topic we want to visit today is the tax law changes that have been proposed by the administration in 2021. There's been two proposals out this year that have talked about, or at least proposed, changing tax law going forward. The first is the President's infrastructure program that is proposing a tax law change to corporate America. If everybody remembers, in the Trump tax law changes, corporate tax rates were dropped from 35% down to the low 20% range, about 21%. And when that happened, it fueled a pretty good stock market rally over the course of the next couple of years, because around 10% of top line income for corporations dropped to the bottom line, and it led to more profitable companies, and that drove stock prices higher. And the second tax law change that we want to talk about today is part of the American Families Plan, where the administration has proposed changing the tax rates for the wealthiest Americans, those primarily that make more than $400,000 of income. And included in that is a special tax on capital gains that would impact anybody that makes more than $1 million of income. So why are those important to us as investors? The primary thing is when people have to pay taxes, generally speaking, they have less money available for spending. If corporations have to pay an extra 10% of their income in taxes every year, that's 10% of income that they can't pay to expand a plant, 10% of their income they can't pay to towards new employees. And at the end of the day, corporations still want to make a profit. If corporations are paying additional tax and they can't add that money to the bottom line profits, ultimately as investors, we're going to look at the profits those companies can generate, and there's going to be a readjustment to stock price. Again, going back to the Trump tax law changes in 2017, when those changes occurred, it didn't necessarily lead to businesses doing any better on the top line, but it did lead to greater profits on the bottom line, and it drove up stock prices over the course of the next couple of years. Now, the one that affects personal income, the American Family Plan, that again is not corporate. That's families. That's individuals that are making more than $400,000 a year. You would think that, okay, those people are doing very well. They can afford to pay more in tax, and this video is certainly not here to argue about that point. But what it does bring to light is, again, as people are paying more in tax, that's less money they have to spend on other things. And if those people were, maybe in the market to buy new cars, or if they're in the market to, potentially buy a second home or do a large home improvement, they might put some of those things on hold and put those off until the future. Now, there is part of that tax law change that I think could have a pretty big impact on American families, especially American retirement plans. The tax law change that applies to the capital gains tax could have ramifications that I think the administration hasn't necessarily talked about. So they talk about changing the capital gains rates on anybody that makes more than $1 million. And that sounds like a tremendous amount of money, and it is. However, what I think gets lost sometimes is the fact that if you are a small business owner in this country, your retirement plan, your retirement assets are tied up in your business. And when you go to retire, one of your goals might be to sell that business. And that sale, you might have worked for 25 years in a business making a decent living wage, but the real value of what you built is not in the wage that you make every year. It's in the value of that business when you go to sell to somebody. And if when that person goes to sell, they're going to recognize potentially $1 million of gains on that sale, they could potentially lose almost 50% of that transaction to this new capital gains law. I think it's easy for a politician to be out talking about how the super wealthy are getting these gains in the stock market and therefore can pay more tax. And again, I'm not here to argue whether that point's valid or not valid. Certainly Jeff Bezos, if he has to pay an additional tax on any capital gains, he clearly can afford to pay that. But I think it's the people that they don't think about. It's the taxpayer that they don't necessarily think about when contemplating some of these laws, who could be impacted. And those impacts could be significant. The greatest number of American businesses are owned by small business owners. They're not owned by the Jeff Bezoses, the Bill Gateses of the world. They're owned by, your neighbors. They're owned by my neighbors. They're owned by people that have very small businesses where a lot of their net worth is tied up in those businesses.